What if you could blend the safety of life insurance with the growth potential of the stock market? Sounds almost too good to be true, right?
Well, that's kind of the big promise behind something called Indexed Universal Life Insurance, or IUL for short. So let's dive in and unpack what that really means.
The easiest way to think about an IUL is like a hybrid. On one side, you've got a permanent life insurance policy, but, and this is the key part, it also has a cash value account that's tied to a stock market index, maybe something like the S&P 500. That's where the growth potential comes from.
Okay, but here's a super important point you've got to understand. Your money isn't literally in the stock market. Instead, its growth just mirrors an index. So you get this awesome protection when the market tanks, but there's a catch. Your wins are capped. All right, so how does the wealth building part actually work? It's pretty straightforward, really. You pay your premiums, right? Part of that money builds up your cash value. Then that cash value grows, linked to the index, and get this, it's tax deferred. The real kicker? You can tap into that money later on with tax-free loans.
Let's zoom in on that protection piece, because it's a huge selling point. It's called the floor, and it's usually set at 0%. What does that mean for you? It means if the market completely bombs one year, your cash value is shielded. It won't drop because of the market's performance. But of course, there's a trade-off for that safety net. It's called the cap. Think of it as a ceiling on your gains. So let's say the market has a fantastic year, shoots up 15%, but your cap is 9%. Well, you're getting 9%. That's the deal. You give up those huge potential wins to make sure you never lose.
Now, before you get too excited, we have to talk about the fine print. IULs can be pretty complex, and there are some major things to watch out for. Fees can be high and really eat into your growth. As we said, your gains are capped. And remember, this is an insurance product, not a stock, so it isn't regulated by the SEC. All this just means you really have to do your homework.
So at the end of the day, it really boils down to this one question you have to ask yourself. Is that peace of mind, that safety net, worth potentially leaving some bigger gains on the table? That's the core puzzle of Indexed Universal Life.